Hello and welcome to episode number 25 of Prosperity by the Pint. I'm your host, Brice Carter, certified financial planner, chartered financial consultant. You guys know most of the rest. I'm a self-proclaimed millennial money expert. This is a podcast where we talk about money, investing, business, and life success, all while having a cold beer. This week, we have a very special guest, Zach Phillips from Phillips Insurance. He is, I'll let you tell you what you are. What are you, Zach?
Yeah, well, as the name implies, Phillips Insurance, I'm an insurance agent. More specifically, an independent insurance agent.
Home and auto.
Yes.
Those
Home, auto,
things.
business, PNC.
All right. Excited to have Zach here. And Zach is not a beer fan, which I do not discredit anybody against being a beer fan. It's all about your own taste. So I went out and got some cider, some hard cider for us. This is a craft hard cider, though. As you guys know, we're all about the craft stuff here. This is from Farmhouse Ciders, and it's a Saskatoon berry cider, wild Saskatoon berries. I grabbed it because that looked funny. So let's give it a try. Cheers, Zach.
And I think this is from Flushing, isn't it?
I have no idea.
I think it is. I looked at the bottle. Local.
That is actually really good.
Doesn't taste like alcohol, so I'm game.
All right, that's sweet. So Zach,
sweet.
I wanted to bring you in for a couple of reasons. We talk a lot about personal finance, but we also talk a lot about entrepreneurship.
Yeah.
And you are at the cross section of both those things because as an independent agent, you're truly an entrepreneur, but also personal finance and insurance are extremely commingled. So I wanted to start with the business side of things first and how you got into the business, how your family got into the business, and kind of where you guys are at today, and just give us your story.
Yeah, so the story of the business is it started in 1917 when there were horse-drawn carriages in downtown Flint.
So 1917, 102 years ago.
Yeah, 102 years ago in April, my great-grandfather started
That's got to make you guys one of the oldest insurance agents in the country.
I don't know. Insurance has been around for a couple hundred years, so there's
Yeah.
got to have been agents for a couple hundred years. We are the oldest auto owners, family-owned auto owners agency in the country.
Which, for those that are listening that are not from Michigan, Auto Owners is a Michigan-based independent kind of. I don't even know how to describe Auto Owners.
Yeah, Michigan-based. They're considered super regional as far as insurance carriers go, and they are, I believe, a Fortune 500 company.
Oh wow!
So they have $10 billion, over $10 billion in surplus. So
okay, so you guys are the oldest auto owners agency?
Oh, well, it's a play on words. We're like the third oldest auto owners agency. We are the oldest family-owned auto owners agency.
So it was a great-grandfather of yours?
Great-grandfather sold auto insurance when there were horse-drawn carriages. So try selling auto insurance when people are still using horses to get around. Pretty difficult, right?
Yeah. I think you told me one time that it was like trying to sell a second dipstick in a car.
Yes, yes. That's what I had been told. I have never met my great-grandfather.
Okay,
so.
Yeah. So this very old business, still family-owned, which is incredible. I think only something like 10% of family businesses make it to the third generation. And you guys are now on your fourth?
We're the fourth generation, and I looked up the percentages before. I'm fourth generation, and less than 1%, if I remember correctly.
Then to the fourth generation. We're talking to the 1% here, folks, so there you go. So give us kind of the timeline on the business and you entering the business specifically.
Yeah.
So your dad obviously was in it, and your grandfather, right?
Yes. So my grandfather and great uncle were in it. They didn't get along. My grandpa bought my great uncle out. Fast forward a few years, my dad back in 1986, 87, bought the agency from my grandfather. My grandfather was 40 years older than my grandpa, or than my dad.
Oh, wow.
So
late start.
Yeah, late start.
No judgment.
Yeah, my dad was about my age when he bought the business, and actually my dad and I are in the process of transferring ownership right now. So.
Oh, wow. So you're going to be taking ownership here very shortly then, I take it.
Yeah, we're figuring out what kind of timeline. We have a price point. We have a valuation, outside valuation of the business.
Congratulations. We're talking to an equity partner here. So now, how'd you get into the business?
Well, when I was 8, how much time do we have? Because I can tell a story. But when
I'll speed you along if
okay.
we're running short.
Okay, so when I was 8 years old, apparently, I don't remember this, but I was actually playing remote control cars in the parking lot when my dad was working on a Saturday at the office. And I walked into the building and I saw Phillips Insurance. And I looked at my dad, I said, Phillips Insurance. I said, Dad, Grandpa used to be your boss, right? Mm-hmm. Well, yeah. I said, but now you're Grandpa's boss. Yes. Well, I want to be your boss someday, Dad. So the dream apparently since I was 8 was to be my dad's boss someday.
That's one way of doing it. I didn't imagine you playing with insurance policies as a kid as opposed to fire trucks, but I guess that's one way of looking at it.
Yeah. So apparently it's been my plan since I was 8. I don't recall that very conversation, but the plan was to keep it in the family, right? You can't have it that long. It can't be that much history and then not keep the business in the family. Yeah. So when I got into college time frame, my plan was to make money somewhere else and then buy the business later when my dad's ready to retire, keep it in the family, keep it going on. But I moved down to Texas, worked at a nonprofit, came back, worked at Chase Bank, hated Chase Bank. Don't bank with big banks. Yeah, you got to fire your big bank.
Episode 5, fire your big bank.
Fire your big bank.
We have an advocate here for our podcast.
Yes. So I hated working for Chase Bank, and didn't matter what I could do. You could sell $1 million in deposits or $1 million investment. It didn't make a difference. So
as far as what you could do personally with your own finances.
With your own finances or affecting the organization in a positive manner, it didn't matter.
Yeah.
200,000 employees at Chase Bank. Nobody cares.
Yeah.
So a couple years into Chase, I started begging my dad. I said, I need a spot at the agency. I know you don't have room. I can come in as a sales guy. I can do this. And he kept telling me I don't have money, can't afford the base. And so I said, that's fine, Dad. I was single, had no debt, made enough money, more money at Chase than I needed to, had it saved up. So I said, give me $10,000, guarantee me $10,000 plus commission, and I'll just take care of it.
So you had the savings to afford you an opportunity to go into a 99% commission based position and survive that in order to be where you are today.
Yeah, I could float for a couple years if I needed to.
So that's a good. I mean, we've talked about entrepreneurship on this a lot, but making saving the money so that way you can bust your ass to get to where you need to be, so you can take the leap of faith that it takes to get you to the entrepreneurship dream that you're trying to accomplish. Yeah. So you're a good personal finance story in that regard.
Yeah. I had actually a spreadsheet going what was I earning at Chase and my projected earnings at Chase. Yeah. What's my earnings at year 1, year 2, year 3 at the agency, and I had a 3 to 4 year time frame that if I couldn't make it in 3 to 4 years, I was gonna have to find something else to do.
Looking for a job.
Yeah.
So now you're at the agency. You're about to be an owner. I guess just kind of break down the business for me as number of families that you guys serve. I mean, premiums. I know that's an insurance, big insurance number. Employees and what the plan for the future is, because that's what we like to look at.
Yeah, so employees were 7 people, 7 folks. Premium volume, families were over 1,000 families that we serve day in, day out. Over a couple hundred of those accounts or families are mine that I brought into the agency, so about 20% of our customer base. And then premium numbers, we hover around $4 million in premium that we send to insurance companies.
Very good.
So those are all that's revenue to the company that we send off to.
So and don't forget to drink some of your cider while we're here, because we got to enjoy it. We got to it's in the tagline, all while enjoying cold beer. So
you got it. But
so what's the growth plan? I mean, now that you're becoming a equity partner, I assume that the next generation now wants to make some changes, wants to do some things to really foster growth and get to the next level.
Yeah, absolutely. So in our office right now, I earn more than I ever would have at Chase, with a lot more freedom, but I'm not nearly to where I want to be. So the trick is steering an old ship, right? Or I was actually talking to my father today, and it sometimes feels like you're pulling a wagon with a broken wheel.
I'm sorry, Steve.
Yeah, well, he actually came up with that phraseology. But right now, as far as growing the business, I need to double it in the next 5 years is really what I'm shooting to do. That's the goal. Yeah. Double it in 5 years, which is certainly feasible.
Yeah.
In the insurance agency world, in our world, there's 2 ways to grow the business: acquisition, organic growth.
Yeah.
Organic growth is marketing, advertising, referrals, bringing in those people without paying too much money outside of the advertising budget. Acquisition, of course, is buying other agencies.
Yeah.
So I am actively pursuing both.
Okay.
Acquisition-wise, I have a running list of agencies that have old owners that don't have a perpetuation plan that I've introduced myself to.
That's wise.
And all agencies that we could easily afford. A lot of those agencies get bought and seller financing, so as long as the business can support it, it makes good sense. And then as far as organic growth, that's where I got to get my dad on board.
You're primarily looking at acquisition growth over organic growth?
Not necessarily. Organic growth is more difficult to get my father on board with, because it takes a lot more work.
Okay.
Acquisition is you just pay some money, you buy
the business,
book.
Right?
Yeah.
Well, I think organic growth can be hard in any industry, but in a service industry, which I look at insurance as a service industry,
yes.
It can be difficult, right? Because you're looking at a price-based value for the consumer, which was right, wrong, or different. That's what they look at it, right? What is my premium? Yeah. And so people will come and go over things that are outside of your control.
Absolutely.
Drastically. So you got to be above and beyond the service level, and you also have to have a competitive offering, right?
Absolutely. Yeah.
So the organic thing can be harder in any service-based industry, but the other aspect of it is you're having to turn this ship and get into, the next thing with your dad, right? And get him on board for that.
Yeah.
I like multi-generational businesses because I'm in a generational business. So we all kind of share some of the same challenges and opportunities.
Yeah, you get to work with your dad, right?
I do work with my dad, and overall, it's really good. My dad is more hands off and is fine with being like a board member of the organization and not necessarily having the thumb on the day-to-day, which allows us the freedom and longevity and latitude, I guess, to do things like podcasts where we drink beer and talk about money. So,
which is working out.
Yeah, well, I think so. We have some loyal listeners. Hi, loyal listeners. So Zach, talk to me a little bit about personal insurance. I wanted to get the business story, got a little bit of the business story, and I'm sure we'll circle back to it some. But what are some of the big things that individuals should be watching out for as they're buying personal insurance, home and auto? Some of the biggest mistakes you see, red flags. What do they do when they shop? How do you competitively get a quote? All those kinds of things.
Yeah. So, man, see, Brice wouldn't give me any of these questions before the episode because he wanted to catch me off.
I feel like you get authenticity when a person is not prepared.
That is true. You do.
Yeah.
Yeah.
So
not polished.
Well, yeah. I guess because I asked you 8 questions there at once. The first question is, what are some of the biggest mistakes that you see people make when it comes to their own personal insurance?
I suppose buying solely on price. So insurance, now the price has to be there.
Right.
And of course, we can't control the price. But the price has to be there. It has to be affordable. It has to be within the circle of affordability. So buying solely on price, cheapest policy possible, is probably the biggest mistake we see. And the reason is because insurance is one of those products that people buy because they have to. Mm-hmm. Right? You got a mortgage. The mortgage company says you have to. You have the government that in all of its wisdom tells us we have to buy auto insurance.
Right.
All that kind of stuff. So people buy it because they have to, so they look for the lowest price possible. But insurance is a lot like a lot of other products in that sometimes, not always, sometimes you get what you pay for.
Right.
And because people have to buy it, they're not interested in learning more about it. They just have to get it to comply.
So, I mean, there's coverage amounts and deductibles and all those different components. But me as a consumer, if I'm not a financial expert or insurance expert in any way, shape, or form, I have no idea what I should have for coverage amounts, limits, deductibles, et cetera, et cetera.
Right, you're buying insurance to comply with some requirement, whether by a mortgage company or state law or whatever. You're buying insurance to comply with a requirement. So people tend not to take much of an interest in what they're buying outside of the price.
Yeah.
And one thing we stress to our customers is, the price has to be there. We have to find you something affordable. But at the end of the day, I want you to feel good about what you're buying. I want you to make an informed decision on what you're buying.
You're taking an education-based approach.
Yes.
Saying, look, if your house is worth $300,000, we don't want to buy a policy for $250 to cover dwelling and replacement and loss of possessions and temporary housing, right? We want to buy something that is maybe $500,000.
Yeah, and
is that a bad analogy?
The only thing I would correct there is you say what your house is worth. Insurance companies don't care what your house's market value is necessarily.
They care what the rebuild cost.
So you're looking at the rebuild cost, which is now starting to seek reach parity, I guess, with market values.
Yeah.
Whereas before in 08, 09, 2010, people were buying houses for $10,000, $20,000. Maybe Ed was doing that.
Yeah.
And the replace value on that's a lot different.
So yeah, I mean, the thing I got to know as a consumer is what the rebuild cost is, plus all my possessions, plus what it's going to cost to put me in up somewhere where my house is being rebuilt, and so on and so forth. And if I don't know that, then I might end up purchasing a policy based on price that's worth way less than what all those things I just listed are.
Correct. Yeah. And to give you an example of that, we had a guy who's had a total house fire 2 years ago. His house, the coverage A, what he was insuring his house for was $300,000.
Okay.
But after the total house fire was finished, the check he got from the insurance company was close to $750,000.
Oh, wow.
Because of living expenses, your contents, all sorts of stuff.
So I guess are the same mistakes made on the auto side as the home side, or is that a different line of mistakes that you end up seeing?
Similar in the fashion that people don't seem to take an interest in the coverage part of it.
Right.
That's the same mistake, but
and this is where I gotta knock the insurance side of things. It's because it's confusing.
It is. Yeah.
I'm in personal finance, and I look at this shit all the time, and I look at complicated financial metrics all the time, and I read through my policy, and I still don't fully understand it.
Yeah. Well, yes.
I mean,
yeah.
It's complicated.
And actually, insurance contracts are written at a 6th grade level, which might make us feel like idiots when we read it, but the verbiage is at a 6th grade level. But there's if, ands, and buts, and go to section 5B and subject to section 7A. And
who decided that was 6th grade level? I don't understand.
That's what they tell you. It's supposed to be written to the 6th grade level.
Yeah.
The words are 6th grade level. You can understand the words, but reading through the contract is confusing.
I get that. So, but so that's why people, I think, end up attracted to price, because they don't understand coverage, because coverage in and of itself is confusing as can be.
Yes. Yes. Yeah.
Yep.
Absolutely.
So, other than based on just shopping based on price, other mistakes that you see?
Yeah. On auto, you had mentioned auto, underestimating liability.
Okay.
So a lot of people carry 100 over 300. So 100,000 per person, 300,000 per occurrence on their primary liability limits on the auto. That coverage is only in play and only there and used, will only ever get paid out if you kill somebody, if you cause an impairment of bodily function or disfigurement. That's the only time that coverage is ever going to get paid out.
Okay.
If you kill somebody, do you think $100,000 is enough for the lawsuit that's coming?
No.
Yeah, probably not.
So, to ask maybe a dumb question on this, could you have 1 in 3 if you just bought $1 million umbrella?
You can't get $1 million umbrella with 1 in 3.
Okay, so
you have to
an umbrella is an overarching policy that just basically covers liability above and beyond home and auto potential liability things, which I almost always recommend an umbrella policy because they're dirt cheap and they're just an extra line of coverage.
Super cheap.
So 1 in 3, 100,000 and 300,000 of liability coverage is not enough.
Yeah, no.
Okay, so what is I mean, this is maybe very broad because you got to know a person's financial situation, but what is a good reasonable amount of liability coverage?
Yeah, so there's two things we say in our office if we're having a conversation with the customers. One, what's your net worth? What assets are you trying to protect?
Yeah.
We don't have to know all the details, but just give us an estimate. What's your house worth? What's your retirement accounts look like? And people get really weird when we ask that. Because we're not a financial advisor.
It's because you're creepy.
Maybe so. Maybe it's a beard and bald
it's
head.
It's a beard and bald head. Yeah, I don't think that's it. So, is there a certain X times net worth that you should be doing liability coverage for?
Yeah. No. Well, that's a good question. The liability piece of it's a difficult question to ask or to figure out how much you should buy.
Yeah.
However, it is very cheap. So typically, we ask people, what kind of assets are you trying to protect?
Yeah.
And 2, buy as much as you can afford because it's cheap.
Yeah.
It's really cheap, and you can't predict who you're going to hurt or how bad you're going to hurt them.
So, I mean, maybe if we were going to give a rule of thumb to our listeners that are maybe outside of state and they want their net worth is $300,000 and it's mostly liquid cash, what should they be looking at liability coverage wise?
At least $500,000.
$500,000, yeah. So maybe 2x. 2x your net worth is a good liability coverage limit.
Yeah, I would say at least $500,000. Then you can always buy an umbrella.
Right, there you go. All right, so that's good to know. So how can consumers make sure that they're getting a competitive policy for the coverage that they are getting? How do you shop for insurance?
Yeah, good question. So that's kind of one of our key value adds is that we're independent. So we're an independent agent. We're not beholden to any company. You go to any company, most any company you see advertised on TV are either captive or direct. Captive meaning the agent has to sell that company's products, or direct meaning you're dealing directly with the insurance company. Now, how many people actually like insurance?
Most people, I mean, it's about like buying socks. It's not exactly a thrilling purchase.
Well, I think stocks is exciting to buy.
Socks.
Oh, socks. Oh, okay. Socks.
Stocks, that's a different topic.
Yeah,
depends.
Yeah.
Socks are not super fun to buy.
No, they're not. Or detergent. Who wants to buy laundry detergent?
Yeah.
But, gosh, I forgot where I was going.
You were going somewhere about direct and
independent. Oh, right. So people don't like buying insurance.
Take
and
a
they
drink,
don't.
Zach, you need a break there.
Hold on. People don't like buying insurance, and people don't trust insurance companies.
Yeah.
But they're going to go buy directly from the insurance company, from some 1-800 number, and you talk to a guy named Rakesh. I mean, somebody you'll never meet, know, or see, or can't understand.
So I guess, but don't most of these direct companies have independent lines that are sold through independent agents?
They do. Well, not all of them.
Not all,
but some of them do. Yeah. We call those bisexual companies.
Bisexual. That's okay. That's appropriate, I guess, for that terminology.
It's not politically correct.
I'm sure. Well, it's not belligerent either. It's not intended to be insulting. So, I guess
descriptive, not insulting.
Kind of just your best pieces of advice for personal finance, for a person on their personal insurance for the best financial practices.
Yeah. Well, you're the financial advisor here.
Yeah, but I don't know property and casualty and home and auto nearly as well as you do.
Yeah. So I would say insurance is designed to allow people to accept risk.
Yeah.
Right. It's designed to give you a foundation to protect what you've built, so you can go further. So, just look at it that way. Look at you're protecting your current and future assets, and when you start seeing it in that perspective, you're going to take a more educated approach to buying insurance.
Oh, I guess I never really thought about it that way, but that makes a lot of sense.
Yeah.
One good marketing idea that you're going to implement, get the old man to implement.
YouTube videos, YouTube ads.
Okay. All right. I don't know that that's new or fresh, but it's a step in the
It's
right
not
direction.
new. It's new for us, and not a lot of agents do it.
That's good. Oh, that is true. I think insurance kind of lags behind on marketing creativity.
On everything, yes.
Well, Zach, I appreciate you being here. This was a good time. This is a good time as always. Zach Phillips, Phillips Insurance. Your website is?
WJPhillips.com.
WJPhillips.com. Pay him a visit. Thank you for watching Prosperity by the Pint and listening to Prosperity by the Pint. Be sure to subscribe. iTunes, Spotify, YouTube, Facebook, Stitcher, wherever you listen, wherever you watch, we're there. Cheers.